there's, one really good example of how we're doing our part. There's a ton of emphasis on reshoring American supply chains. We've partnered with a company who received a decent amount of DoD money to make boron carbide. So today, about 85% of global boron carbide is made in China. And if you think about the supply chain, Turkey makes the boron goes to China makes the carbide, and the U.S. government's buying tank armor from China. You can see the vulnerability there. And so there's a company that has an aqueous chemical process where they'll source boric acid, and they, through a relatively innovative process, actually can take our boric acid and make boron carbide. And so that would be a fully domesticated boron supply chain. So we would be reliable upstream feedstock. You have another company that is US based and midstream. And then now we're supporting industrial base on the downstream side. We will sell to diverse customers. We've qualified 14 customers today. That has ranged from chemicals to LCD glass, textile fiberglass, boron carbide, fertilizers, and all forms of insulation.
I think a lot of upside at both fields. Both of them are mature fields, but I think underexplored, perhaps for different reasons at each one. At Ravensthorpe, I think you pointed out those new intersections that we had underground from Gem and Harbour View. The deposit's relatively shallowly drilled. It's only drilled to an average depth of 100 metres. The deepest hole into the system, or the mineral resource is estimated to 330 metres below surface. The deepest hole we've got into the system itself is 415 metres below surface. And anyone who knows key and gold lodes in Western Australia will recognise that that's relatively shallow for these systems. So we think there's a lot of upside there. They're open along strike and in some cases at depth. And there'll be further drilling undertaken by us before the end of the year. They're testing those new production horizons. So a lot of opportunity at Ravensthorpe. And then you've got what's going on up at Forestania. So that's a significant tenement package that straddles the Forestania greenstone belt. It's been locked in a nickel business for a generation, and we think there's a real gold opportunity there. It's an historical gold field. It produced through up Bounty, which is the historical producer that did 1.3 million ounces at 5 grams over its life. Bounty's not part of the tenement package, but we've got the geology to the north and the south. It's an incredible package of ground. It's one of those rare opportunities to acquire an underexplored greenstone belt in WA in a record gold price.
To this point so far, we've shown that there's gold in the property, in the tailings, as you would expect. We've identified potential critical minerals like gallium and tellurium, and also co-products of silver. We've done a high-level concept. We've got high recovery, 60%, quick leach times, 3 to 6 hours. We've got a high-level MPV, 33 million, based on the old gold price, much lower than where we are now. So what we're jumping into now is the characterisation, and that's where we get into real detailed studies. So we're doing a comprehensive auger drilling program so that we can establish a modern day resource estimate of what's on site. We're doing a phase 3 testing program with extract. So that's all designed about, optimizing those recovery rates, optimizing those leach times, having a look at, the cost benefits of this technology through being able to recover unspent water and reagents. So, and of course, there's other things alongside that. There's the environmental aspect of this, which we should be making a move on very shortly. So we are bringing this project together for that construction decision. So this is a major step in the advancement of tech use towards production and Fulcrum as a company in terms of its concept and its ability to scale.
It's been a great year for us. We produced 6% more gold. The gold price was up quite materially. We didn't have the full benefit of the gold price because we had some historic hedges outstanding that were necessary for us to fund the MTR project. But importantly now, from the 1st of July, we're fully unhedged, so shareholders get the full benefit of the gold price. So it was a good year for us, and also a year of record. So it was record production in the second half of the financial year. It was record earnings and profits per share, or earnings per share. And we're proposing a record dividend also for approval at the upcoming AGM. So despite the fact that we commissioned 2 transformational projects with quite a lot of capital, we still are able to increase the proposed dividend in US dollar terms by some 80%. So I think that's very positive for shareholders. And then also at the prevailing gold price, we should be pretty much de-geared on a net basis before the end of the next financial year, so before the end of FY26. So that puts us in an incredibly strong position. So in summary, a good set of results.
I don't think it's greenfield exploration is not where we're at in the cycle right now. It's what you've got that you can bring to market in an economic manner in the near term is where the opportunity set is. And, I think what's unique about Iris, we have that exploration upside, but at the same time, we have near-term monetization because of our quick path to market from the restart. We get kind of the best of both worlds. So you get the potential growth in NPV from exploration upside along with near-term monetization. It's not some spreadsheet calculation that's years away, end of the decade. We're year and a half away from cash flowing here. So it's a unique opportunity set.
Yeah. And lastly, what's the outlook for the next sort of 6 to 12 months for Iris Metals? And is there anything else you want to share with our audience?
Yeah, we're doing some drilling. We just announced another land acquisition a few days ago. We bought the Ingersoll mine, which is another prior producer on private ground nearby our existing portfolio. So that expands our footprint in the Black Hills by a third or so. So quite substantial for us. We'll be coming out with more drilling results and resource statements on 3 projects between now and the end of the year. That'll substantially increase our reserves. Really good prospects. The news flow you would want to see as a junior progresses up the value curve towards a producer. And we've got all of those things.
In terms of the deposit itself at Media Luna, the maiden reserve was 3.3 million ounces at 4.5 gram a ton gold equivalent. And we're now measuring ourselves in gold equivalent because with the onset of Media Luna, we become a copper producer. At steady state production, we'll produce about 45 million pounds of copper a year out of Media Luna. And the other important thing about Media Luna is where it's situated on the south side of that Balsas River is a very rich cluster of deposits. And so we see the infrastructure that we invested in for Media Luna, this $1 billion, all of the work around that, the power, the water, the tunnel, the conveyor through the tunnel, that will see us in very good stead as we are good stewards of this asset over the next 10 and 20 years. So we see, in short, decades of mining to come in Guerrero. We've made a remarkable difference in those communities and in that state. And we plan to be continuing to do that for years to come.
Within those different rare earths have different economic values. So some of them could be worth $6, some of them could be worth $1,000 a kilogram. And it all depends on the SKU and the basket of what you've got. So for us, we've got what's called the heavy rare earths, in particular dysprosium and terbium. And economically, they are superior to most other rare earths. And I think, your dysprosium's over 220 US a kilogram, terbium's over 1,000 US a kilogram. So that makes quite a compelling case if a heavy percentage or distribution of your mineralization is skewed to those 2 rare earths. So the other thing to point out with these heavy rare earths, almost all of them come from China, and almost entirely most of the processing capacity is from China. So even if you've got them here in Australia or other places, most likely they'll end up in China for processing and separation. So it's a very strategic commodity, or those bunch of elements, those heavy rare earths in particular, because there's the security of supply and is what's key to this.
Again, very fortunate as we are well funded for this metallurgical program. And then just coming back to the industry, we've got enormous tailwinds in the rare earth space. This industry is not cyclical, it's structural and it's strategic. And there's enormous demand in this industry, and especially building up and shoring up this supply chain of rare earths in the West. And you would have seen there's been incentive pricing, like the Department of Defense in the US have put a floor price on NdPr, which is 2 of those magnet rare earths, and that's specifically for MP materials. And we can see how that is decoupled a grip that China probably had on this market. And then there's an enormous amount of funding and grants available for the right projects in the space. And we certainly think that Jupiter and Critica is one of those projects. And then lastly, just to touch on the regulatory and jurisdiction piece. Now, I've operated in South America for an extended period of my career. And there is a specific competitive advantage to have a project in a tier 1 location as Western Australia, where we are located. Processes are very transparent. We've got stable government. And I think that's significant risk mitigation and also a specific competitive advantage we have with where our project is located.